get to talk during the day like we used to. Oh, hey, everybody. Welcome to Dumb Investing. That guy over there is Harry.
That guy's Lloyd. It's about to get dumb up in here.
Oh, yeah, it is. On tonight's show, what you can expect to see. We review the stocks that we are still holding from when we were rolling dice and picking random stocks and putting all of our retirement money into a guess. So we're going to check our portfolio out. We're going to talk about the market a little bit because something happened today. I don't know. Somebody was talking about something that's transitory, but it doesn't matter. We'll talk about all that stuff. We may do some real estate updates if there are any, and we'll try to cut out of here in 20 minutes like we say we're always going to do. So 19 loyal subscribers, thank you so much. Heads up to London. Sorry it's so late. 9 to 5 is killing us, and it's just the way it is. And to everybody else, welcome to the dumbest investing show on all the YouTubes.
All right. Let's do this. So the first thing we're going to do, we're going to check out our portfolio. And just so you guys know, this is real cash. This is not paper trading. We just like to put all of our eggs in one basket on random dice. So the overall positions today, I did this on purpose there for Mr. Ticker. We've got
a lot of red.
We've got a lot of red, and we've got a little bit of green over here.
Yeah.
But the funny thing is that I wanted to show you a little bit of a surprise, and I wish I could do half of it at a time because I kind of want to do a nice little reveal. But Lazy Boy took a bath today, down 3.15%, as did Dynex Capital.
Why? Oh, man, Dynex, now we're under the line.
We're way under the line. Lazy Boy, there's the line.
Yeah,
ouch.
What happened to Lazy Boy?
Ouch.
They have earnings today?
No. We have earnings coming out for Bank of America tomorrow, and if any indications of the Goldman Sachs earnings that came out today, they should absolutely crush expectations.
They're going to crush it, and their stock's going to go down. They're going to lose.
That's what happened to Goldman Sachs today.
I know.
So Goldman Sachs estimated earnings per share was $10. Okay, so let's put that into a little bit of perspective. For every outstanding share Goldman Sachs has out in the market, the estimate was to make $10 per share. That is a huge amount of money. What they came out with, their actual earnings, $15 per share, a 50% beat. Absolutely crushed expectations. Blew them out of the water. What did Goldman Sachs do today? They went, I think I got it this way. They went up a little bit.
1%.
Huh?
They only went down 1%.
Yeah, they went up a little bit, and then they went down 1%. You got to be kidding me. When you beat expectations by 50% in overall earnings and your stock goes down 1%, I don't know what this market's looking for. That is crazy. Like, they crushed it. Bank of America likely going to do the same thing tomorrow.
Yeah, so we're going to lose all our money tomorrow. It's going to be great.
All of it, yeah. Throw it right in the dumpster. Put it in the dumpster fire.
Now,
all right.
We'll notice we're one stock shy. We did sell a stock today.
We did sell a stock today.
Was I jumping ahead? Did we want to talk? Is BurgerFi on the bottom and Highlang?
Yeah. Well, no,
they're both up.
Not Highlang, but so for the gainers, we've got Fiserv, so the company that we didn't know what they do, but they compete against Visa, MasterCard, and all those kind of things. They went up 1.16% today. And then, big surprise here, BurgerFi up 6.07% on the day.
What happened there?
I don't know. I don't know.
I love it.
But I love it. Let's keep it going. Keep the money printer going.
The heck with the banks that are making money.
Keep the tendies. Let's go. This is awesome. I mean, 6%. Let's check how they're doing after hours. Probably don't want to know, but let's talk.
Yeah.
Not too bad. Not too bad. Down 1.3% after hours. I thought maybe they'd give it all back after hours. We'll see how tomorrow goes, but what a run.
I love it.
Good day. All right.
Yeah, that's
So
good stuff.
over to the overall portfolio. We lost some money today, apparently. We're down $7.89 roughly if this daily P&L thing is right, which seems about right because I think we were sitting about $28.60 yesterday.
Yeah, that sounds about right.
$7.89, $8, $8.52, whatever. Weevil doesn't like to do math. If you don't want Weevil to do math for you, click on the link down below. Deposit yourself $100, get yourself up to 2 free stocks. All right. So what did we do today? We sold IVSG. So this is the inverse growth stock that we were talking about yesterday. And we were speculating that CPI, consumer price inflation, or consumer price index, whatever it was going to start to trend down. Well, was Picker wrong? So this guy, way wrong. Consumer price inflation posted at 0.9% month over month. So that is, what's that, 5.4% or something like that year over year?
Yeah, almost double what they were expecting.
Yeah. And the funny thing is when this kind of stuff happens and you've got a huge blowout, the market kind of did exactly what it did to Goldman Sachs stocks. It didn't really give a flying shoot.
Didn't. It was the craziest reaction ever.
Crazy.
And we don't know if that's because people were we accept that, it's going to be transitory and blah, 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 blah. And the only guys talking about tapering are guys who can't vote for talking about tapering. So the guys that are voting aren't saying anything right now, so maybe everything's fine, and Powell is just going to pull out transitory, get everybody drunk, and that's just the way it's going to be.
You know what? I feel like I misled our 18 loyal subscribers.
Okay.
Thinking that things were going to print out down. But, as I kind of look back and reflect on it, in my day-to-day, in my 9 to 5, I'm always looking ahead. I'm looking at what's going to happen in, 2 months, 3 months, 6 months kind of thing. And it gives me kind of what the feeling is, what should be happening today. And I have a tendency to forget that all of these reports are historical. So it's, it's kind of like a lagging indicator, right? Because it's stuff that's already happened. And I forget, June's water under the bridge for me, and I'm looking, 3 to 6 months of what's coming up. And I got to tell you, in 3 to 6 months' time, I'm still very much on the page of inflation is transitory, prices are going to start dropping.
Yeah,
and it's everything. It's going to be everything. The used vehicle markets make up a big portion of that inflation data. It was 1/3. So of the 0.9%, vehicles went up 0.3% month over month.
So funny thing about the vehicles. One of the talking heads today when I was driving home was talking about how CPI takes the sticker price of new vehicles, not what people are actually paying. Yeah. So
that doesn't work.
Well, so in the old days, we're going to say 2 years ago, if a truck stickered for 50 grand, if you had any type of negotiating at all, you could walk in and negotiate that thing down to 45, 44, 43, something like that, right? You could you saw them advertised on TV, $7,500 off MSRP, right? You could go in there and buy something off sticker. So what people are saying, well, back in the day, 2 years ago, we used to be able to get a deal and we wouldn't pay the sticker price. That sticker price has gone up maybe 10%, and we're having to pay the sticker now because the dealers are like, go get it somewhere else because they ain't got it. And so, so it's like a double whammy. That we used to get a discount. They were using the sticker for CPI, and we'd get a discount off of it, right? And now they're using sticker, which has gone up, and we lost our discounts. So yeah, that's kind of one.
Yeah, it's a bit of a double whammy. I
played.
think it's kind of some of the reports I was looking at. I think it was year over year, used vehicles were up 45%.
Yeah, something crazy. But
That's a big number.
Yeah, but what's happening is, there are less new ones for us to buy. So if you got an old rig, like my 120,000 mile rig, you might start to be thinking, hey, it might be time to be thinking about. You go to the dealer and they're like, well, I got 3 new ones to choose from. You're like, okay, what about them 5 used ones? Okay, yeah, let's go talk about one of them.
Maybe.
That's exactly what it's like. It's
but
crazy.
The good thing about vehicles is that we know that those prices are definitely temporary. We know that there's a chip shortage.
Yeah.
We know once those chip shortages become less of an issue, that manufacturing is going to be able to ramp up. It's going to take some time.
The whole supply chain they're saying it's going to take 2 years to fix, but eventually the supply chain will be back to normal.
Yeah, it's definitely going to take some time,
is.
without a doubt. I mean, I don't think there's any arguing that, but it's going to drive prices back down into some form of normalcy.
Yeah.
So it is temporary, even though it doesn't feel like it momentarily.
So Peter Schiff had a really good talk today with Meet Kevin, and that was kind of fun to watch. And Peter Schiff is doom and gloom. The clouds are there. We're all going to die. And, he was talking about how important it is to get into real estate and get into as much debt as you can possibly get into right now because, man, when hyperinflation hits, it's going to all go away. It'll disappear.
Debt is cheap right now. There's no doubt about it.
Absolutely. That's why I wish I could buy a stupid rental house, which is not going to happen.
So we've talked about the HELOC, and then you sent me this interesting article, and I heard it on Meet Kevin as well, where Wells Fargo pulled out of the HELOC.
They canceled them.
They canceled the HELOC.
Even if you had one, they said you can't even use
it.
I
don't know if that's necessarily true. They took out the personal lines of credit.
Yes.
But I don't think they completely canceled the home equity lines of credit. They may not be giving out new ones, but they're not canceling the home equity lines. They're canceling the personal lines, which are different than a home equity line.
Yeah, and it's really weird because these banks have so much cash on hand, they're having to give it back at night.
The reverse repo.
The reverse repos, yeah. I mean, it's just, this whole world is crazy right now.
It's wild, isn't it?
Yeah. But it's fun, man. It is not. We get a boring day every now and then. Like Monday.
Yeah, there's not many. You're right.
Day. But man, most days there's a lot. There's just like what, just how, what? Like so that new egg going up like an AMC. There's still the apes. I mean,
AMC is going to zero now.
Oh, it did today.
Oh yeah, like the past couple of days, it's down 20%.
It's all the Bloomberg guys talk about. It's crazy.
Yeah, it's getting crushed right now.
Huh?
What else do we got? We've got.
Are all the momentum stocks getting crushed?
Yes, all momentum stocks are getting crushed. Yep.
Oh.
Yep.
So what are the apes pulling out? Where do they put their money? I saw Build-A-Bear still going bonkers for some reason.
I don't know. Over the past couple of days, I haven't seen anything that would signal a movement out from the apes into something else.
Huh.
Yeah. I could see hedge funds doing it, saying that the game's over.
Yeah, maybe they're not shorting like they used to because they don't like getting caught.
That's what I heard. I heard that AMC shorts dropped dramatically. I think they went, maybe just speculating here. I think the numbers are close, but they were up over, 25%. And now I think they're down to like 13%.
So did you hear Melvin Capital released earnings last week sometime? And they lost 57% in the first two quarters.
Feel horrible for them.
Oh yeah, my heart is broken. Wowzers.
Yeah, totally insane. So tomorrow we've got It was, yeah. I mean, we can talk about CPI information for a lot. So just to put a couple things into perspective about CPI and how I'm feeling about inflation.
Okay.
Couple of the big numbers. We obviously talked about vehicles. That one's a big driver, and it's been a big driver over the past couple months.
Right.
The one of the big ones that changed, actually two of the big ones that changed month over month, was meat and women's apparel. Believe it or not.
What is included in that category?
Women's apparel? Well,
is it everything? Is it like,
if you pulled up the stock ticker, probably BAL, one that we've sold, the cotton one, probably going to the moon right now.
You think?
I don't know. Pull it up. Just as we talk about it. So the other one that we've talked about is meat. And I guess one more is gasoline prices. So two things that happened over the last couple months has been substantial, what would you call them? I guess hacks or ransomware attacks on the meat industry and the petroleum industry. So obviously everyone's probably aware of the one that happened that shut down the pipelines throughout the U.S. that couldn't move petroleum from Texas.
BAL is still pretty flat.
Okay, from Texas up to New York.
Right.
So that is a pretty big impact on petroleum prices, just because the laws of supply and demand obviously take place there. I think fuel and petroleum are probably going to continue to rise a little bit here as people continue to move. So I'm not really expecting things to fall off there yet. We'll see how it goes over the next couple months. For meat, the big catalyst there was the ransomware attacks that shut down JBS across North America. So
like 13 plants.
Yeah, so a huge deal, right? Basically, effectively shut down everything. And JBS has some huge amount of market share for the entire North American market. So any slowdown in their productivity obviously has a dramatic effect on prices. So again, the laws of supply and demand will always prevail. Supply was low, demand remained equal, which means prices go up.
Yep.
So even their 1 week outage, whatever it was, is going to drive up meat prices temporarily. So we'll see over the next transitory. I think we're moving away from transitory to temporary.
They are.
But I think the new drinking game has to be either word, right? Yeah.
I say we play the transitory game just to see if they.
Yeah. It sounds like a better word. Yeah. So I think meat prices, maybe not next month, but over the next couple of months, will come back into line, and we'll start seeing some deflationary numbers there. I said it, deflationary.
I love it. So in our 9 to 5 job, we pay attention to lumber at times, right? That's part of what we do. So we both know, like the Bloomberg and the Wall Street people are all talking about how lumber's coming down. Well, today, some of the home builders released a statement about here's why housing isn't coming down, y'all. Yeah. I thought that was awesome.
I haven't seen it, but I could guess. I could guess what they're saying. Let me paraphrase, and I'm only going to guess what they said. They're going to say, our suppliers haven't reduced our costs because their inventory levels, they haven't worked through their inventory levels at their high prices, and therefore housing prices cannot decrease. Also, coupled with that, housing demand is is through the roof right now, so there's really no reason to decrease pricing.
And lead times.
Yeah.
You've got to understand a house going on the market today, lumber was so expensive when we built it.
Right.
So it was awesome.
Did I paraphrase it well? Just guessing?
You did. It was fun.
And the big box stores of the world, they're saying the same thing. Home Depot and Lowe's, they haven't reduced their prices yet. Why?
Nope.
Because they work on such it took them, listen, the price of lumber futures went up so fast their inventory levels and contracts were lagging behind the pricing of lumber futures, right?
Yep.
The same thing happens on the way down. They're paying the higher prices. Their inventory dollars are still coming in. They have a 4-week lead time from when it ships from the mill in Canada or wherever it comes from down to Chicago. It's going to take 4 weeks to get the material. So they're already a month before that product that they paid for even hits the ground. And then they got to distribute it to all of their box stores after that. So they're 2 to 3 months before they realize cheaper prices. And prices have come off. Well, we're somewhere in the realm of 65% in the last 4 weeks.
Something like that.
So the numbers are just absolutely huge.
Yeah, it's awesome.
So it's interesting.
So what else is going on? I think that's pretty much it. You want to pull up our Webull again? Do we have some cash?
We do have some cash. I was wondering if you wanted to spend some cash. We're about $300.
Oh, okay. So that's enough for a decent buy. So what is today? Today's Tuesday. When do you want to roll some dice? You want to roll some dice?
You know what?
Maybe tomorrow?
I think it's a good time to buy.
I do too.
Yeah. So
right.
I think stocks have taken a bit of a dip today, and as we like to say from me, Kevin, paraphrase them, buy the dip.
That dip. All right, so everybody, we're gonna roll dice tomorrow night, pick some random stocks, and if we get 100 live viewers, we'll let you choose for us. That ain't never gonna happen. So we're picking on our own.
Maybe 1 year, but it ain't gonna be this year.
Maybe London, maybe Jay pulls in all his friends and we get a viewing party in London, picks our stocks for us. That'd be pretty cool.
That'd be a lot of fun. I would love to do that.
Put us up in a pub. See how I use that nomenclature? Yeah.
Nomenclature.
We call them bars here, but they're pubs over there.
They're pubs up here too.
Oh, they are? You guys call them pubs? Well, I guess we have some pubs here, but
pubs, restaurants,
we
whatever.
call them bars.
Wherever we go, we buy beer. That's what we do.
If you get a little bit more down south, they call them ice houses. We're going to the ice house.
What? I thought those were only up in northern Canada.
An ice house is basically an open air bar where you go up and you buy a bucket of beer.
Definitely don't have those in Canada. It's too cold.
It comes in the ice and you walk out to your table and you put down your 10 beers and drink out of the bucket. Yeah,
just a bucket of beer?
Bucket of beer,
I like
man.
buckets of beer.
Good stuff.
Mm-hmm.
All right, so let's see. Real estate, I got no updates at all.
No updates.
No.
Dude, we can get out of here in 23 and a half minutes.
23 minutes. Yeah, that was pretty good. Thanks, everybody, for joining us. We sure appreciate you. Do all the YouTube stuff for us.
Yeah, and if you guys would like to hear more about what we think on inflation, how we're viewing the upcoming markets, and kind of what we're doing, feel free to leave us a comment. We'd love to be able to connect with you and absolutely give our perspectives on things, and definitely not financial advice, but
purely entertainment.
Yeah, purely entertainment, but we do love sharing, and we have a lot of fun doing it. So don't forget to follow us on Twitter at Dumb Investing, and I posted down at the bottom there, and Instagram Dumb_Investing. And you can see a few things there that you don't get to see on here.
And whatever you do, don't trade like that guy.
Definitely don't trade like that guy.
Have a good night, everyone.
Good night.